Focus in on Apollo hospitals, talk a little bit about the business outlook, the regulatory approvals, as well as a stake sale in Apollo Munich Health Insurance. To talk about that and lots more is Shobana Kamineni, who is the former president, CII Executive Vice Chairperson, Apollo Hospitals. Shobana, hi. Thank you so much for joining in. Congratulations on the stake sale of Apollo Munich Insurance. Now, as we understand the deal internals, can you tell us a little bit more about the total transaction value, the total debt of the company, and will you be utilizing these proceeds to reduce the debt from the books of the company?
About the transaction, and yes, it was, that I think that the timing was good, and we realized quite a large profit from the sale in the 10 years that we invested till we exited. We actually exited with 1,600 crores, and some of this will be family share, and some of it will be Apollo Hospitals. Apollo Hospital today has a debt of 3,000 plus crores. And this will to a small extent, but I think it's not just the one step that we do. And we also have to recognize that that Apollo is not in a debt crunch situation. It in fact is has been growing quite positively, especially the last 4 quarters. It's done exceedingly well. So I don't think that we're under any stress whatsoever. But it would be nice to have to build up a kitty, because there will be there's always a need. This is a sector that is hungry for investment. So in the near future, you'll probably see Apollo looking at other avenues also to be able to fund its growth.
Shobana, tell us about the total deal transaction from the point of view of the promoters. What's the total promoter shareholding that's currently pledged? How much will the promoters repay? And post the repayment, what percentage of the promoter shareholding is going to be pledged, and how do you intend to release the pledge on the remaining shares?
In the next, 30 days, our pledges will come down to in the region of 20 to 25%. So I think that's completely, it's a safe promoter, holding that in terms of what we're going to keep there. And we owned 41% of Apollo Munich, and so the proceeds of 41% of that will come to us. We'll use majority of it to reduce promoter pledges, and this is something that we've assured the institutions, and you'll see that we'll make good on that in the next 30 days.
Okay, so on the business side now, the company has no significant capacity addition over the next 3 years. Do you think this will lead to an improvement in operating metrics, that will drive a strong cash flow generation now over the next couple of years?
That's always been our intent, that the investment cycle has slowed down, because we, in the last 2 years ago, we, up till for about 5 years, we added almost 10,000. We added 4,000 beds in capacity. So it was a huge capacity addition. Fortunately, we're seeing some good growth in our recent investments, whether it's the investment we made in a hospital in Guwahati, where Lucknow, our Bombay hospital is turning around. Proton is actually doing more than what we projected, and it's helping our entire cancer vertical with this. So I think that Apollo is very focused on using the assets that we've built, using them intelligently, using them well. And we do have the capacity to serve many, many more. But on the other hand, in terms of the pharmacy, we are continuing to add 400 new pharmacies a year. So, and we're doing that with clinics and other diagnostic centers. So I think that very carefully we're calibrating what we're growing, and also using our internal capacity, which we fortunately built up at the right time.
Markets are hopeful of a strong revival of the flagship Chennai cluster. How's this segment performing? And tell us also about the Navi Mumbai Hospital. How is that doing currently?
Chennai has always been our stronghold, And the fact that we built so much capacity there, and this capacity we're seeing now is being used more effectively. We've got quite a few new doctors also on board. We've been able to manage, you will see that our outpatient volumes have really grown. We've moved into specialized segments of treatment, and overall I think that the case mix has been intelligent, and this has led to the growth. Some of those learnings were also used in Navi Mumbai. Fortunately, I think that Mumbai as such might be overcrowded, but the area that we are in, actually the segment, that catchment has huge potential. So we're seeing some promising trends, and I think that the fact that strategically it's a good future bet because of the fact that the new airport is coming there. Once the bridge comes, it'll be 15 minutes to the mainland. So Navi Mumbai is a very good asset.
Right. Shobana, how is it that you see yourself continue to gain market share in this increasingly competitive Indian healthcare services market over the next 2 years?
I'm actually worried that this country won't have capacity because if you see that most of the acquisitions have been in brownfield or in mergers by private equity coming in, and how much new capacity is being added, whereas India continues to demand good quality healthcare. So and Apollo will continue to differentiate itself. So I think that it's important that we actually continue to build new assets, and we continue to change our model to be able to to serve many more people. So I think that competition will be of a very different kind.
Sure. What was the performance of the pharmacy business? Do you expect better growth there because pharmacy has been in a high growth segment, so to speak?
Last year was we achieved 100% of our target in terms of the top line and bottom line. We continue to grow that business at 20%, and you must understand that last year actually the pharmaceutical, in terms of the pricing, NPPA pricing, actually the market declined by 5%. But so if you add that on to our growth, it would be a bit higher, that we would have actually grown at 22+%. And this will continue to be there. We have many geographies. I would think that only in Chennai city and Hyderabad we would be saturated, but in many geographies there are opportunities for us to build the similar market share. So retail will continue to be a strong business, and with high growth, high ROCE, and we've actually been able to crack the model. GST has been helpful in helping us expand and move our distribution very quickly. So it's an exciting sector, and you would have heard recently also that company has actually been hived off with the NCLT clearance, and it is poised for another round of high growth.
So will you be able to sustain your margins as rapid expansion of hospitals and rising competitive pressure could lead to cost escalation, especially in staff costs?
So I'll give you an example with oncology. We all were worried when the cost of the medicines were drastically cut, and but when we went back and did the review, it was actually when the pricing was cut, our top line didn't decrease. We actually grew much more. It's because the huge demand, the latent demand that is there in the market. So hospitals like Apollo that have been around and understand the market will be able to move around slightly more agile in a fashion that will allow us to keep certain margins. Like even if you see pharmacy, for instance, we would be thinking of generics, we'd be thinking of private label, of high quality private label, because this would be able to grow our margins, and it would also protect our market share. So many interesting strategies will start emerging to move with the market. But basically, there's more access being created. We should understand that in a country of high demand like India,